On to this story now. The global financial market risk sentiment and as well as the blackouts are set to continue to put pressure on the rand. On top of that, the fuel price will remain volatile as the world navigates the Russian invasion and the implications that have come as a result. Investec chief economist Annabel Bishop joins me now to talk about this and more. Thank you very much for your time, Annabel, this evening. I suppose the first thing we'd like to do is probably gauge an understanding that this fuel crisis that we are currently having in South Africa is not exclusive to us, and that there are many other countries, Greece, Ecuador, and the like, that are going through the same thing.
Absolutely. And, of course, if you look at countries in Europe, also suffering quite a lot as well. I was reading a very interesting report today about companies who actually are finding it very difficult in Europe to run aluminium smelters, other very energy-intensive industries. And, of course, that will negatively impact economic activity in Europe. Remember, it's not just oil, of course. It's also petroleum products and coal and gas. In fact, all of the exports coming from Russia. And, this is exacerbated by the sanctions against Russia. But of course, even before the Russian-Ukraine war, we actually found ourselves in a situation where increased demand had actually pushed up energy costs. And of course, that was coming on the back of the exiting from the COVID regulations, increased travel globally, increased demand.
And in the South African context, our government has initiated a relief of the fuel levy, which is now at 75 cents for this month. I mean, how much of an intervention is that realistically, especially when looking ahead, when we can understand that this is not a sustainable solution to giving consumers any kind of relief?
Well, I think, it's important to remember this is happening all over the world. If all the countries are experiencing very high energy costs, of course, they're experiencing very high inflation as well. And you talk about the relief in the fuel levy, of course, lower than previously. Excluding that, we were already going to get an increase in petrol prices, for example, of around R1.30, R1.40, coming through tomorrow, of course. And, this is really worrying because the August calculations so far indicate we're going to get yet another fuel price increase as well. So very big petrol price increases, diesel price increases, also important as well, illuminating paraffin each month. And of course, that eats into consumers' income. It's driving up inflation. And of course, as well, that's resulting in higher interest rates for South Africa. But of course, other countries around the world, everyone is facing globally higher inflation from energy and food costs.
Right. I mean, there is talk, Annabel, that there could be a global recession looming. Various analysts and economists have weighed in on the sentiment. This, of course, would change the trajectory of the price of oil. I mean, does that mean anything significant for us, and taking into account the local unit as well?
Well, I think, when we actually have a look at the oil price, it has come off a bit. It's no longer, running closer to R1.20 to the dollar, obviously closer to about R1.10 today. But the reality of the situation is that if we see severely increased sanctions against Russia, there's concern that oil actually might start moving towards $200 a barrel, if not higher. So that's a great worry. Of course, as you're talking about the potential for global recession, and what we're really seeing, the reason why there's concern about that is that there's concern that the Federal Reserve Bank in America, their reserve bank or central bank, could push the U.S. economy into recession in order to try and control inflation. And this is because they are seeing very high wage increases, in fact, seeing wage price spirals because of the fact that inflation is high. Remember, of course, they have a different labor market to us. They have very low unemployment, and they battle to find people to fill the job openings. Of course, that's also pushing up prices, wages as well. So there's worries that the United States is not going to be able to bring its inflation down. Of course, seeing it rise to 8.6% recently, that's CPI inflation, and of course expectations are could rise to 8.8% in the next print. These are all great concerns and has led to the United States hiking its interest rates because it's worried that inflation will become embedded at these higher levels. And, many key economic voices weighing on the fact that the United States might actually have to weaken its labor market quite substantially as the only way to get its inflation down. And of course, that means weakening economic activity and could quite easily push it into a recession if that persists.
Annabel Bishop, as always, thank you very much for your insights. She's the chief economist at Investec, joining us this evening to speak about the economic troubles, especially when it comes to Brent crude, and just indicating that South Africa is not the only one in the doldrums when it comes to suffering from the Russian invasion. Here's a look